Hi, Sam Miller, Remax Stars Realty, and I'll give you a quick housing market update because there's a trend taking place that I think it's really important that you hear about and that you understand, especially if you're in the market to buy or sell a home. So the trend is that it's a seller's market, and it has been a seller's market for a while. We are in a shortage of available homes still. However, we're seeing more houses actively come on the market. But there's still more buyers than there are sellers. Now, there's been some mistakes made, and I won't mention by who, but there's been some mistakes made in the market where people have had a tendency, because they hear the market is so great, that they have a desire to obtain a price that's ridiculous, a price that's not realistic, a dream price, so to speak, with no data to support it. I mean, you have to understand that when you're selling your house, in most cases, there's financing involved, which means there's a bank, and then the bank, in most cases, has to have the house appraised. That house has to appraise, in most cases, for the bank to be able to give the loan. So if you've got a house in a $400,000 neighborhood, and fundamentally you have a $400,000 house, and you want to ask $750,000, the bank's not going to give you the loan because the house isn't going to appraise. So that's part of some of the issues that are taking place. And why I bring this up is in our Knox County MLS over the last 30 days, there have been 34 houses that have had price reductions. You heard that right, 34 houses. As of today, there are only 29 houses actively for sale available to buy, and there were 34 that had reductions. Now, some of them didn't sell. They expired off the market and didn't sell. Some of them are under contract now after they've made their reduction. Some are contingent. But why I bring this up is, even though the values of homes are up right now compared to last year and the year before, there's a threshold of value that you have to be careful you don't go beyond because the market is shifting. There is a change taking place in the current housing market that you may or may not be aware of. Where I'm headed with this is at the very beginning of this year in December, the interest rates were about 2.75% to 3%, depending on your credit and the loan you were interested in obtaining for a home. The rates have bounced up clear up to 5.5% and in some cases 6% already in basically the last 7 or 8, 9 months. Now they're bouncing around a little bit. You see an 1/8% drop, 1/4% increase. So we've been in the fives, and we've been in some even in the high fours. But the rates are significantly higher than they were less than a year ago. Why that makes a difference is because if a buyer could afford to spend $250,000 in December of last year, they can no longer afford to spend $250,000 because if they were at 2.75% on the rate and now let's say they're at 5%, almost double, their money doesn't go as far because the monthly payment on whatever house they want to buy has now increased. What I'm getting at is the buyer who could have spent $250,000 today may only be able to spend, let's just say, $200,000 or $210,000 as an example. So the buyer who could afford to spend more is now still maybe in the market to buy, but now they can spend less because they don't qualify for as much. So that's something to keep in mind. The higher the rate, the less value price the buyer can spend on a home. Partially why the market has been driven and the pricings have accelerated so fast has been the affordability. So many times we have buyers that call us that want to buy who are renting, and they're like, I can buy a house for $150,000 or $175,000 and my monthly payment to buy it with taxes and insurance is cheaper than what I'm paying for rent each month. So you need to take that into consideration as some of the affordability shifts and the payments start to go up with these increases in interest rates. What the buyer can afford to pay is going to become less. So the time to price your house right if you're motivated to sell and you need to get it done is in the very beginning. It's not 6 weeks into the listing and decide I'm going to change the price and drop it. You want to have that house priced right when you list it so that the serious buyers who are ready, pre-approved and ready to go, if they look at it and like it, that's where you get the multiple offers and you drive potentially the price even higher than the list price. If you overprice it, you're probably not going to get any offers and you're going to have to ratchet the price down with a series of price reductions. and ultimately end up with less money doing that approach than you would if you put a fair price on it and bingo, it goes with multiple offers. So this is a shift that's taken place. The interest rates is a big part of what's driving it. And I'm sure a lot of you, if you're not in the real estate business, you don't give this any thought because you're not in the business dealing with this every day. But I see it every day. This is a significant trend that is happening right now. So the key is you put a fair price on the house at market value, which is the current market value, which is higher than where the values were. But you don't want to put a greedy value on it or the house just sits and the house becomes shop worn. And buyers always ask us two things. Why are they selling? How long has it been for sale? And you can imagine what they're looking for. They're trying to figure out, is this a fair price? Is it overpriced? So anyway, just thought this would be helpful. Feel free, if you have questions, give us a call, 740-397-7800. I'm Sam Miller, RE/MAX Stars Realty. I'll come back to you next week. Have a good one. Bye.